All right, today we're doing a deep dive into the market DNA system. Specifically, we're going to walk through a case study for the Dow Jones, or DJ30, focusing on cycle 2_2. Now, our purpose here is really simple. We're just documenting the events of this particular cycle as they were recorded within the system's geometric framework. So think of this less as a prediction and more as a play-by-play observation. Let's see what the model recorded. Okay, so let's start with section 1, which will give us some context for this cycle documentation. So here are the basic details. The asset we're looking at is, of course, the DJ30, the Dow Jones. The cycle has a specific ID, DJ30-22. This documentation was recorded on April 7th, 2026, and at that point, the cycle had officially completed phase 2. So how did this all kick off? Well, that takes us back to the very beginning, to phase 1. This is where the entire initial geometric structure for the cycle was laid out. You could call it the blueprint. And here it is. This is the chart from back on March 6th, 2026. What you're seeing is the complete geometric structure that the model defined at the very start of phase 1. Everything that happens next is measured against this initial setup. Within that structure, the system identified a very specific level, the primary entry point. It's labeled M, and the price was recorded at $47,526.60. And then there was also an optional secondary entry point. You can see it here labeled as PC, which was set at $46,908.20. So given those two potential entry points, the system then came up with a single calculated mean entry for the whole cycle, and that was $47,217.40. Now, this is where you really see the unique DNA of this cycle's model. These are the core parameters that define the entire structure. You've got a trapezoid time set for 14 days, a third triangle domain of 3.86%, and a risk coefficient of 1. These numbers are really the specific signature for this cycle. All right, so that's the structure. Now let's look at how the model planned for risk and what its initial price targets were, all defined way back in phase 1. To calculate position size, the model runs a hypothetical risk preview. In this case, it's based on $100,000 in capital, with a max drawdown set at 5%, which is $5,000. Based on those inputs, the system calculated a trade size of 0.13 for each of the potential entries. And just to be perfectly clear about how that number is determined, the documentation provides a very specific mandatory statement. I'm going to read it to you directly. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. And here was the initial roadmap for potential exits. The phase 1 structure laid out 3 targets. First, T1, at the mirror or lower trapezoid level of 47,633. Next was T2, at the apex N, set at 48,346. And the final target, T3, was at the trapezoid top of 49,035. So, that was the plan. That was the blueprint from phase 1. Now for the interesting part, let's look at what actually happened in the market and document how phase 2 played out. And here you go. This is the chart updated to April 7th. You can now see how the actual price action moved in relation to that geometric structure we saw earlier. It's these movements that ultimately resulted in the completion of phase 2. Let's break down the sequence of events as they were documented. First, that optional secondary position at PC was, in fact, opened. Next, as the price moved up towards the N level, a safety buffer of $1,271 was secured. The market then pulled back, and both positions were filled again. After that, the price hit the first target, T1. At that point, half the position was released, and another $540 was added to the safety buffer. And then, finally, phase 2 was officially marked as complete when the price touched the trapezoid lower boundary at $47,633. So that brings us right up to speed on this cycle. To wrap things up, let's look at the model's defined paths forward from here and, of course, go over some important disclaimers. According to the model's protocol, there are 2 defined paths this cycle could follow. There's the normal path, which goes in order 1, 2, 3, then 4. And there's an alternative path, 1 to 3, then to 2, and then 4. As we've just seen, this particular cycle has followed the normal path so far, moving from phase 1 into phase 2. So, This leads us to the big question, which the documentation itself raises. Will the next phase be phase 3? Since this is an ongoing observation, all we can do is continue to document what happens next, as it happens. And finally, before we go, a few very important disclaimers. This is for public model documentation only. It is absolutely not financial advice. The model's rules also prohibit using leverage above 10, and you should never, ever invest essential personal funds. And that concludes our documentation of the DJ30 Cycle 2-2 through the completion of Phase 2. If you want to see more documentation from the market DNA model, you can always visit the source website.